We've with us Rajat Rajgaria. Rajat is, of course, a chartered accountant and an MBA in finance. He joined Motilal Oswal Securities in 2001. Currently heads the research team that closely tracks a universe of over 150 stocks across sectors. It's a familiar face, isn't it? Rajat Rajgaria, head of Director Research at Motilal Oswal Securities, joins us on the show. Rajat, thanks for joining in here on ET Now. Firstly, I was just asking you about this fear in the market that we're likely to see at least another 0.5% hike in repo rates through the course of FY14. Do you think that fear is legitimate?
But I think that fear is quite legitimate, and we won't be quite negative if we see another quarter repo rate hike in the course of this quarter. What is more important is that you will see some correction into the short-term rates. So if the MSF, which is currently at 9.5, gets brought down further, then at least your yield curve, which had become quite inverted or negative, will start flattening out. That's always a little positive from the growth point of view. But I think there are a couple of important things. First, while the markets have remained weak for the last 2 days, they have been extremely strong on the run-up till Thursday. So we are back to where we were on Wednesday, although the daily volatility just keeps on changing the views of the people. That's first. Second, the currency is fairly stable now in this band of 62, 62.5. And whichever way you want to look at it, whether the correction on the trade deficit front or the outlook on the flows on the debt part, both of these things do make you feel positive that currency should remain in this band of closer to 62, and that is something that markets will feel good about.
So Rajat, what happens in the near term? Do you think the market is going to keep gyrating between 5150, 5200 at the floor and perhaps 6100 as a ceiling?
Well, I think that 5150, 5200 was kind of a surprise, and because you went there in a hurry, you suddenly saw a big bounce back also coming subsequently. I would think that the more range of this market is in a band of 5500 to 6000, and whenever you try to break either of those two ranges right now, you see an opposite reaction also happening. The markets definitely lack the catalyst to break on the upside right now. But I think we have now stayed here for so long that breaking on the downside is also low, is also very, very low, because every quarter you are still seeing some trickling of derating happening onto the P, even if the market remains here.
Specifically with banking stocks, Rajat, then what would be your call? Do you think some of these PSU stocks, one should now look, are we likely to see more downside from here on as the asset quality concerns also mount, and would the bias, if any, be in favor of private sector banking stocks?
Well, you saw a massive rally into these banks. Of course, they got beaten down to very, very cheap levels. And from there, you saw a big rally from the first week of September till last Thursday. So you are seeing part of those gains getting washed away. But I think if you see the short-term rates remaining or short-term rates correcting down from here, then at least some of the near-term pain that we had seen into these names will also stabilize. At this point of time, the differentiating fact between private banks and PSU banks is how they are managing their asset quality. And at least till now, the private banks have been doing quite well. I think from here on, you will see some pain trickling into the private banks also, as far as the asset quality concerns are there. And by the way, the volatility in both up move and down move in private banks has been quite similar compared to the PSU banks also. So yes, the bias would remain for private banks over PSUs, but you will see both of them participating to in the same direction, whichever way the market trades them.
So Rajat, I mean, in times of such volatility, do you think it's still prudent to add to IT positions?
Well, I think IT is a more fundamental case where if you look at all the three levers, first is the dollar revenue growth, there the upgrade cycle just began last quarter, and you will see this quarter also companies guiding more positively on the likely growth in FY14, that forming the base for FY15. Second, what is the new normal for the currency? What looked like a new normal of 57, 58 a quarter back has given way to 60 to 62 now, right? That's second positive. And the third is balance sheets. This market continues to favor companies where balance sheets are very credible, cash rich, and can pay dividends. So IT companies are just getting more and more spacious in terms of cash creation in the balance sheet. All these three things put together means that fundamentally IT will continue to be favored. There will be patches whenever you see a risk-on rally coming into the markets when IT will underperform. But I think right now IT as a pack is more of an absolute return sector, need not be looked at a relative return sector.
Rajat, how weak does the OMC pack look to you now that it looks pretty clear that the government is unlikely to press for a hike in diesel prices, at least in the near term, at least not till the elections are out of the way? How weak does the OMC pack look to you?
Well, the OMCs typically move because of either of the two catalysts. One, whenever the government takes fuel price hikes, or secondly, whenever you see the international oil prices correcting down. So if the first catalyst is out of way, then you will have to wait for the second catalyst to happen. So whichever days you will see the global oil prices correcting down, those will be the days when you will see the OMCs actually moving up. They purely remain a trading basket of stocks, and that will be dependent upon your view on where you think oil prices trade down. I think at least in the very near term, it looks like that oil should remain in this band of 105, 110. And if currency also stabilizes, then you may not see downside in the OMCs from where they are trading now.